In this video, I'm going to show you how to trade boom and crash correctly and make a lot of money. Boom and crash is one of the instruments which is very dangerous to trade in the market, and let me show you why. When most people try to trade boom and crash, they come to the 1 minute time frame and then try to trade this type of things right here. They want to catch these small moves or trying to catch these spikes here, and I've been explaining to you over and over in previous videos why people lose money in this market. If this is your first video here, then it means you are new to the channel. First thing you need to do is subscribe to the channel and then like this video. Now let me explain to you what is happening to most traders in boom and crash. Maybe you've already heard me saying this, but you just need to hear it again, right? So most people, when they do is they want to try and scalp like 5, 4, 3 candles on these small ticks candles here. So what these small tick candles does is each and every one of these, if you place a standard lot, right, if your lot size is equals to 1, right, that's what is called a standard lot, right? So if you trade a standard lot here, each of these small tick candles is going to be worth 50 cents, right? So if you want to trade this and make sense, it means if you want to catch 5 of these, you would take $2.50, right? But for most people, they don't want to get into the market for $2.50. So what they do is they will risk like 5 lots here, so that if they win, they make $10, right? But if you are risking 5 lots here in these small candles, then it simply means that when the spikes like this comes, right, chances of you losing a lot of money here is big, right? So if you look at this, you can see 1, 2, 3 candles here, and then the huge spike comes and then it destroys your account because you have too many trades in this. Let's say you take 1, 2, 3, instead of taking the 4th and the 5th, you have one huge spike here which hits you very hard. And also here you can see it happened again at this point. One candle you enter and then you lose, and you are losing a lot of money because you are placing like 5 lots on that. So it's very dangerous to trade this boom and crash this way, right? The only better way of trading this boom and crash is go to a little bit higher time frame, like the 5-minute time frame. Once you come to this, or let's go to the 15-minute time frame. Once you come to the higher time frame like this, you will start using different type of strategies that you would be using in any other market, right? So for example, if you come here, it's very easy to trade trend line breaks on this market here when you come to a higher time frame. And the reason why I like trading these trend line breaks on this market is because since this market here makes these small moves, since this market makes this type of moves on smaller time frame, it means on the higher time frames, when the market is moving, there is less chances of seeing a lot of pullbacks, because a lot of pullbacks is what makes people lose money in the market, right? So as you can see here, if I draw a trend line here, you can say, okay, the market touches 3 times. On the 4th time it breaks, right? And when the market breaks, since this is boom 500 here, I know that if the market is going up like this, there is more chances of this market keep doing spikes and going up right here. So there's a lot of profit potential that you can get from this market. All you need to do is change your approach. Do not trade the 1 minute time frame, trade the bigger time frame, and trade the same strategies that I share with you on bigger time frame. For example, the trend line break, you can also trade support and resistance. So let's mark out different levels of support and resistance. You will see that this market respects levels of support and resistance even more than other markets like currencies. You can see here, you can trade support and resistance very well with this strategy, because this market here, most of the people are focused on the 1 minute time frame, and most people are losing money on this market. You can take advantage of that. Go to the higher time frame. The other good thing about going to the higher time frame is you are going to be understanding when you are on the higher time frame, you are going to not be placing huge 5 lots, because you know that you can get into this market for a very long period of time. Let me show you one more thing. Most people think that boom and crash doesn't respect stop losses, right? And let me show you the reason why. what happens when you are placing your stop loss at this point here? So let's say you sell at this point here, and then you place your stop loss, let's say 2 candles above, just like this, right? What I want to do here is I want to go to a higher time frame. If I go to a higher time frame, you are going to see that this stop loss of mine right here doesn't even make sense, because this is a very small move. So go to the 1 hour time frame. Look at that. Now you will say boom and crash doesn't respect stop loss, but your stop loss doesn't even make sense at this point. Which market would you place and place a stop loss which is this small, right? So even if you go back down, let's adjust this stop loss here, so let's say to this point here, and let's still go down to the higher time frame. You're going to see this is still a very small movement. So if you are trading with based on higher time frames, you're going to be getting more money per trade than someone who is trading based on this smaller time frame, which looks like a trap, because most of the people really fail to manage their accounts in a smaller time frame. So this video was for me explaining to you why you should not place lower time frame trades on boom and crash, and why you should go to the higher time frame, and you can use any strategy that you want, and it can be profitable, because this market it respects also levels of support and resistance trend line. And also the good thing about this is if you trade based on the where the spikes are likely to come, then chances are you are going to make more money, because there's going to be less pullbacks. So for example, in the boom market you want to be looking for buy trades only. In the crash market you want to be looking for sell trades only, and those trades should be going in one direction of the market, right? So make sure you change your approach to boom and crash and go to higher time frames. If you want to learn more about how to make money in the market, make sure to check out our Forex Master 1.0 course. I'll leave the link in the description. This also, if you want to get free signals every day in trade setups, make sure to join our Telegram channel. Do it right now. The link is in the description below. Thank you for watching, and I'm going to see you in the next one.